Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com for a Tuesday, 23rd May. Hope everybody is doing well. Just real quick, I have a class coming up in literally about 2.5 hours. What is it? Yep, 2.5 hours. So you guys can still register for that. All right, it's going to be about, I'm going to go over some common mistakes that I see people making that is kind of holding them back. It's going to be two parts, one of the charts. So we are going to spend some time on the charts, and then also obviously some psychological issues that, as you know, are pretty much everything having to do with the psychology with the markets. So let's go ahead and get started. As we know, the markets did finally give way a little bit today. We did have a bit of a pullback. If you recall, we've been talking about the 42.21 area. Kind of just hover around there, and then finally gave way today. It's kind of just been a grind lower today, just kind of meandering. Next level, really, if we can't get a resolution done, we also have Fed minutes tomorrow and some more earnings coming out. Probably go revisit 4,100 if that seems to be the case. We at TTS have been literally just trading Tesla because of the lack of volatility in the overall averages, kind of using it as a kind of with a 1.5, 2 beta. It kind of tracks the market. And we actually were in some calls yesterday. The stock ran up to like 189, 190. We did get out, and now we're going to reposition that again. So we've been more or less trading Tesla, which has been great. As if you've been looking for something to do on the options front, Tesla, as you know, is never a dull moment, and it does trade pretty good. So it actually did come back off, traded down to about 185. I think we probably go down to 180, and then we're going to reposition again coming into the week. The end of the week with PCE is the big number aside from the debt ceiling talks. PCE on Friday is going to probably move the markets pretty good. And then we also have Fed meetings. So just on the charts, we are coming off that 42.21. We probably we're back into the range. We had as you know, last week we had a tight range. But generally speaking, I would just call this still overall range trading. So I think we have a chance of coming back down to 4,100 and then going from there. Okay. The NASDAQ also finally given way a little bit. We were up around that 13,900 to 13,900. We actually took out that little level there and then came off again. Still been the stronger market, but looks like we may come down to, I would say, 13,500 area on the NASDAQ. The key level for me is going to be way down around 13,100. I think we could, in fact, come down there eventually. I mean, this, as I wrote on the weekend newsletter, the NASDAQ is, is a little bit of a mania going on, a little mini bubble in the AI space and all that. So we are seeing a little bit of relief. Tomorrow we've got NVIDIA, which is probably, at the tip of the spear of the AI movement. They make the microchips that a lot of the AI is generated from. And so that's going to be really interesting tomorrow. That's after the close. That could move the NASDAQ as well. So we'll see how that goes. But again, generally speaking, looks like we're coming off and we could come down to, there are some levels at 13,500, but for me, I'm going to cover that this afternoon about the higher probability setups, even in the context of an uptrend and all that kind of stuff. So, anyways, and again, very kind of contrast is the Dow has been major laggard now, still ranging, and it's kind of been lagging lately as well. Range between 33, let's call it 33,800 and about 33,100. Nothing really changing there. Actually, more notable is the small caps that have been perking up a little bit recently. We still have to get above 1825, but even in the last couple of days, you notice that they have been actually acting much better than the rest of the stock market. So we'll see if we can break above 1825 on the small caps. I think that's going to be meaningful. But overall, again, just I would call it 1700 to 1825 is the big massive range. Just ugly ranges all across the averages. Hopefully, we get the start of something. The VIX did jump today. Talked about it over the weekend. By the way, if you haven't subscribed to the newsletter, I was talking about that. I've been talking about that. I know some people have dismissed the VIX, but you can see we had a sell off. The VIX was sitting around 15 and a half. Looks like it's headed back up to 20. I'm going to also, important, if the VIX gets above 20, we could get up to 25. The volatility looks like it's looking to, spike right now. So it's going to be, but again, that VIX at 15 did kind of give you a little bit of a signal that at least, we're getting that pullback at the moment. Whether we get a huge spike will be predicated on, obviously, if these, if the debt ceiling talks really fall apart in the next couple of days. By the end of the week, I think we're going to get some further selling. So also bond market, as we know, the bond market has been selling off quite a bit here. We did break down a bunch of levels on the 10-year, the 30-year. We are trying to get long the 30-year, by the way, or actually the 20-year and TLT below 100, as I mentioned. We broke below 129. We are getting into, again, on the 30-year, there's some levels around 125 on the 30-year. The 10-year also has some levels around 112. But that's going to be interesting. If the bond market continues to sell off, that's also going to be a headwind for stocks, I believe. So we'll see if that continues, or is this just another pullback in the bond market. That's, the market up until now has ignored rising rates. But we'll see. I mean, mortgage rates are like 7 on the 30-year, which are also going to impact real estate as well. And so we've got some levels coming up here we just jumped actually on the 2-year. We actually touched that a little bit today and did attempt a little bit of a bounce on the 2-year. I think I mentioned the other day, I think I actually missed our level by a couple of ticks here. So we'll see how that goes. Dollar also looks like, again, looks like it's going higher. And that's, again, will impact all the currencies. Overall, today and the last couple of days, currencies have kind of drifted lower. We have New Zealand tonight, which could move a little bit of the New Zealand dollar. It did come off that 62.95 level for a little bit here. And looks like it's stalling right now. So it's going to be interesting tonight to see if the New Zealand probably has some movement. All the rest of the currencies really just kind of drifting lower. You see the euro, British pound just kind of back and forth. So and the yen I've been talking about, the yen kind of stalling out right now, but it still has some levels I'm looking at below current price. So we'll see how that goes. But I think, the dollar, if rates continue higher and we get a scare in the stock market, it looks to me like the dollar wants to go higher. And so if that's the case, then you're going to have more selling in the currencies. Also in the metals market, you can see gold still languishing. Looks like it wants to, gold is probably going to catch a bid if we get a scare again, if we get further selling in the stock market. I think gold looks like it's trying to hold 1962, and if, let's see if that actually holds. And it probably will get some kind of a bid if we get again if these debt ceiling talks kind of fall apart here. We also copper just looks like that's headed lower as well. We were trying to get long. That just looks really kind of like it's headed down to about possibly the 350 area, maybe even lower. Again, it's going to be pressured by China now. China, I think they came out with some new stuff on China that's going to create some, I guess, some COVID stuff coming back up again on that. So, that's part of the reason why copper's been selling off, because the China recovery has not been there. Obviously, they're one of the biggest consumers of copper in China. So, looks to me like maybe copper wants to go lower. Probably wouldn't be interested in that until about the 340 area in copper. And then oil continues to range trade also, but it seems poised to break out above that 73.84, possibly heading up to that 75. We got inventory numbers tomorrow on oil. So that's going to be interesting. You can see today it had a nice little move higher, especially towards the end. So it looks like it may come up and break above that 73.82, and then maybe get up to that 75 to 76 level, which looks pretty good for a short in oil. Okay. We still have to get above 73.82. It's attempted that 3 times, but it looks like it wants to break out. There could be a breakout trade as well there on oil. And tomorrow's inventory numbers will be interesting to see. And even tonight, we'll see what happens. Nat gas, mentioned that, again, had a nice pop last Thursday after, there were some supply issues or whatever on the inventory numbers, gave it all back. And now we're sitting here, kind of just languishing at 234. So it looks to me like nat gas is probably going to be continuing to range between $2 and $2.50, $3, something like that. There's still pretty good leeway in there, but in the last 48 hours, you can see it's just been really just kind of languishing, not doing a whole heck of a lot. It's got to break above 240, and then maybe there's a gap that was created over the weekend around the 255 area. But man, it just died. It just did doing nothing for the last 48 hours. It's just really incredible how this market is. A lot of these markets are just kind of everybody is already gone for a summer vacation or something. I think it has to do with a lot of it has to do with all the uncertainty created by the debt ceiling crisis. A lot of money going into the T-bills. One month T-bills are 5.5. I mean, that's a great deal, by the way, for you guys looking for some yield. 5.5 on a 1 month T-bill. That's and you can see why a lot of money's coming out of the market, or at least there's so much competition for stocks. I think that's part of the reason why the stocks are kind of just languishing, because there's so much competition now with the yields as high as they are. Short term money, just you can just park your money in a money market fund, high yield money market fund, and get like 5% without any risk. So that's part of the challenge right now. We also have grains been all over the place, back and forth, some pretty good swings. Looks like soybeans have built a bit of a resistance around 345. I'm sorry, 1345. We'll see if that breaks out. Wheat looks like it held 6. I think I mentioned the other day 6 a bushel. We did attempt a bit of a rally, just no follow through. We rally. We actually went up to 660, pulled all the way back to $6, and generally just again kind of range trading in the grain markets, particularly in wheat and corn. Also looks like it's bottoming out around 550, 547. We have been trying to get long some of these grain markets, and they're just hasn't just haven't been cooperating, but it is what it is. So the grains are moving. We're kind of focused on that, and then just focused on what's really moving. That's why I decided to go with Tesla and some of these stocks as a proxy for the markets. You got to, in this environment where a lot of things are just kind of chopping around and just not getting a ton of follow through, you got to make do because the market is going to change. I think we're at the cusp now with the VIX now jumping to 18, 19. We probably get a little bit of a volatility, especially starting tomorrow with the Fed minutes. As we close in on June 1, which is I guess the informal deadline, and every day that passes and they still don't have a deal on the debt ceiling is going to increase the tension and the pressure for them to do something. To this point, the market kind of has taken it in stride, but if again, what's tomorrow? Wednesday. I think coming into tomorrow and the next day, if they come out and say we can't, or there's some kind of animosity again where they're just not coming together. I think we do get some further selling in the stock market. Eventually, again, the odds are that they will do the deal, but there is a slim chance that they won't. That's gonna, if that happens, there's probably 5% maybe odds that they can't get a deal done. What they'll probably do is they'll have some kind of mechanism to pay and whatever, and then it'll get it'll scramble everybody, whatever. But more importantly, I think the markets will react negatively. Again, playbook on that is 2011. Go check it out. And we could see a sharp drop, just as and then obviously that would be actually I would love that because that would create a great buying opportunity if that were to happen. That would also increase the volatility and so forth. So, in any event, all right, everybody, I'm going to get out of here. So again, sign up for the newsletter. Class is starting in about 2 hours. You can still sign up. Just hit the link below. If you need any, if you want to spend 5 days with us, it's been a bit of a, with some of the stuff going on, I think we're on the cusp of getting some great setups. We've actually been doing okay with Tesla. We're just kind of looking for areas to engage in the options market, and as futures have been a bit of a the opportunities. You have to be very, very choosy where you get in. If you're suffering from FOMO in this environment, obviously it's a bit of a struggle. But I think if you're patient, I think we're due for some really nice movement coming up, especially in the currencies and in the overall averages and the bond market. The bond market, that's really where the action is if you're willing to take on a little bit higher risk. So in any event, have a great day. Have a great week. I'll see you on Friday. Again, give me a thumbs up, put some comments in there, subscribe to the channel and all that good stuff. If not, have a great, I'll see some of you guys in class later this afternoon. If not, have a great rest of your week, and I'll see you on Friday. Okay, take care.